Vertiv is a company that produces products that helps in building out data centers, the cabinets, the cooling equipment for all these GPUs and servers that create a lot of heat. Vertiv provides those products. Their products are not quite as expensive as a GPU from NVIDIA, and they don't have a lot of intellectual property in them, not a lot of patents involved. It's just good infrastructure equipment. This company has really benefited from the AI hype and the build out of data centers to the point where the stock's really rallied. I thought it was a good opportunity to short this stock. I wanted to provide an update on how that short position has evolved over the last 40, 45 days. Let me show you the fundamentals of Vertiv, and then I'll go through my short position in this video. Vertiv is a $25 billion company, and they have revenue of $7.2 billion. The company's just really gone up in value, 562% over the last 5 years, and over the last year, 89%. This, in the most part, is an industrial stock. They create equipment that could be in the same category as electrical equipment, but they really benefited from the AI build out. Their P ratio is 52, much higher than if it's just an electrical equipment manufacturer that, let's say, went into commercial buildings. And the forward P is 24.7. Analysts will say that it's a strong buy and that it's discounted by 38%. I think a big part of the discount is that the stock has been falling along with a lot of the other AI stocks over the last 30 to 40 days. So that's something interesting. Revenue, the company has been growing nicely, but I would point out that they're growing well, but when their stock is up almost 90% in 1 year, you would expect revenue growth to be very, very high. And here it's good, but it's not great. They do provide some free cash flow, and I use that to value the company. I really do a full valuation of a company, even though I'm shorting them, just to understand what do I think the company is worth and is it far from the current stock price. So I'll be doing that as well and showing that to you. Looking at the forecast, 10 analysts cover the stock, and the opinions are split. There are some people or some analysts that say that the stock is overpriced, and some analysts believe, boy, this stock's going to be worth a lot more. Overall, they do, on average, believe that the stock is discounted. When we look at their earnings per share, they're enjoying a good period in their history. You could see that historically, they were nothing impressive. They were having a hard time making money in 19 and 20. They were barely making money in 21, lost a little money in 22, made some money in 23, and now they're really enjoying very good earnings per share. And I don't know that it's going to be this good for a long time. Build outs usually mean they get built and then you lack demand in the future. I don't know if this data center build out is going to last a year, 2 years, but I'd be surprised if it lasted more than 2 years. We'll see how things play out. But a good part of why the stock's really rallied is the growth in earnings per share, more profitability, which makes sense. They're selling more product and making more money. Now, when I look at a company whose stock has really gone up just dramatically, I really look for cause and effect. Did Vertiv create a new product that, boy, just didn't exist before? It really solves big problems. And I don't think that's the case. Their products have been around for a long time. There is more demand, but the demand is, as I showed with the sales growth, it's not like they're doubling their business overnight. They're just growing at a good rate. The other area that I think about with a stock like this is, has there has there been a huge innovation that really makes this company far more profitable? And the answer is no. I mean, there's a lot of things that I look at that would lead me to really recognize that, hey, this stock is just worth more. And in this case here, I can't think of a story that really supports the stock price, but it's been an exaggerated stock price. In the course of a very small period of time, the stock has risen 754%. And that's in about a year's time. That's just crazy. But it has begun to crash. The stock is down 36.7% from the peak to this point. And I'm going to guess that the momentum to the downside is going to continue. I started a short position about a month ago, and needless to say, my short position is in really good shape. The stock continues to come down. I believe come down to a more realistic value. Speaking of which, let me show you what I think Vertiv is valued. I valued Vertiv using their free cash flows as well as their earnings per share. Let me show you the results that I got. When I blend the two valuations, I get to a conclusion that the stock is being sold at a premium of 53%. Cash flows that I expect, I try to be generous whenever I'm taking a contrarian position on a stock. In this case, I'm shorting. So I give it a fairly optimistic forecast, starting with this year, $854 million of free cash flow. And I'm growing that cash flow by 10%. They're not in a very high margin business. So generating free cash flow is not that easy for this company. Nonetheless, the forecast is optimistic for the first 4 years, growing at 10%. Then after that, growing it at 3%. The discount rate is 11%. This is a smaller company. It is in a space that is risky, especially if the AI build out takes a pause. I think they're going to be stuck with a lot of inventory. And their intrinsic value of all those cash flows is 11.7 billion. I add cash and take away debt to get to an equity value of the company, which is 8.9 billion. The market cap is 25.2 billion. So there is a hefty premium on the stock of 65% if I value the company based on free cash flows. Earnings per share look good for this year, $2.56. They just had an earnings about 30 days ago. And I'm going to give them a generous PE of 18. This is an industrial. In most cases, I would give them at best a 12, but I'm going to be generous with an 18 and grow that earnings per share by 4%. Based on those factors, I get a 29% premium on the stock. So both methods really yield a premium, and combined, I pour more weight on the free cash flow method. I get a premium of 53% is what I estimate is being priced into the stock. How valuable do I believe the Vertec business is? And really valuable businesses fit into the green quadrant that I have here. And these are businesses like NVIDIA, very valuable company that has intellectual property, has patents on their GPU technology that nobody can copy. They have to innovate and create their own idea, their own IP. So NVIDIA can keep competitors out of the space and really be profitable and really grow their business. In the case of Vertiv, they don't have intellectual property of that type, and they do have a number of competitors. They're in a lower margin business, so they don't generate a lot of cash like NVIDIA is generating. That said, I think it's a good company, and they belong in the gray. In companies in the gray, I typically look for a very good discount, and I look for trends that are going to favor that company. In this case here, I don't see them being other than a gray company. They do have trends that are benefiting the company, the AI build out. But that's where I put the company. In most cases, for me to buy the stock, I'd want a discount. In this case here, it's being sold at a premium. So it leads me to short the position on this stock. I shorted Vertiv about 30 days ago, and the gains have been good so far. I'm basically sitting on a gain of 24%. And short sales are quite reversed. When you start a position, you start by selling the stock, and the proceeds so far have been $4,266. The cost, if I were to close out the position today, would be $3,428. So I'd make $838, which would be a 24% return in about 30 days, which is a very good return. I may add shares to this position. I'm looking to exit the position when I get to either a 30% gain or a 30% loss. And judging from where the market's headed, there's been a pretty strong sell-off, especially around that data center build out. You're seeing companies, even NVIDIA has been on a real downslide. So it may reach 30%, maybe in the next 30 days. And I'll probably sell, or I should say, close the position by buying shares and closing out this short position. So that's my video on Vertiv. Let me remind you, I'm just an investor, and I thought the opportunity to short some companies around the whole AI hype was an opportunity that I couldn't resist. I don't typically short a lot of stocks, but I've been shorting a list of companies that I thought were overpriced. So far, so good. I closed out a big gain on CrowdStrike, and I made 30% plus on that short position. I just closed a position on Supermicro Computer, and actually that gain was 52% in less than 30 days. And this one seems to be on its way to be a good gainer as well. Please don't take this as financial advice. I'm not recommending you short any stock. Short selling is very risky. And I really encourage you to make your investment decisions completely independent of this video. With that said, thank you for watching, and good luck investing in 2024.